Hey guys, it's Carter. Welcome back to the Credit Card Blueprint. Hope you guys are all having a fantastic day today. Now, in today's video, we are going to be talking about the top 6 credit card mistakes to avoid so you guys can, one, save money, two, and actually take advantage of these credit cards. Instead of being fearful of them, let's use them to their full advantage. So, I hope you enjoyed this. If you want to learn more about credit cards, if you like credit card hacking, how to travel with credit cards properly, because most people do it wrong, make sure you guys like and don't forget to subscribe. So I hope you guys enjoyed this. And if you want me to do a full travel video, let me know in the comments, comment travel down below, and I'll make a video for you guys. But let's dive into this. All right. So the number one mistake that I commonly see people make is simple: missing payments. Payment history is the most important factor when it comes to your credit score. It actually makes up about 35% of your credit score, and one late payment can significantly hurt your credit score. And think of this: credit card companies collected $14.5 billion in late fees in a single year. So you don't want to be paying late fees, hurt your credit. You want to set up auto pay. It's the biggest hack you can do. Even if you just set it up, obviously not for the minimum payment. I prefer you guys to pay it off in full. But if you can't, at least make the minimum payment, right? The minimum payment is going to be better than no payment. So let's dive into mistake number 2. Mistake number 2 is only making the minimum payment. I know I kind of just doubled on myself there, but the minimum payment right now, the average minimum payment is $129 a month. Now, about 15% of cardholders in the United States only pay the minimum payment amount every single month. So, paying the minimums are good because you're not going to hurt your credit score on the your payment history, but you are going to be hurting your credit score on other things like utilization rate and other things like that. So paying the minimums honestly can keep you in debt for years. You're going to be paying thousands in interest over the course of trying to pay off that card, and most of the payment actually goes towards interest rather than the principal. All right, the third one is going to be carrying a balance month to month. Now, the average credit card APR is over 22%, which is 22%, guys, is absolutely crazy. Americans paid more than $105 billion in credit card interest last year. $105 billion. So you want to pay these cards off and use them to your advantage, right? Carrying a balance does not improve your credit score. A lot of people think, oh, I'll carry a balance for a month or 30, 90 days, whatever you think. That is not true. That is not the case. Your credit score does not get affected from that. It actually could hurt your credit score carrying a balance more than helping it. All right. The fourth mistake that I commonly see people make with credit cards is maxing your cards out. So this is extremely common. People see that they have X amount of dollars that they can spend, so they spend it, right? So experts recommend keeping your credit card utilization rate below 30%. So as an example, if you have a credit card a maximum limit of $100, try to keep it under $30. That will help improve your credit score, and high utilization rates can drastically lower your credit score and fast. Many Americans are approaching their credit limits as debt reaches record highs right now. All right, the next one here, the fifth and not final, we got one more here, but the fifth one here is applying for too many credit cards at once. Each application carries a hard hit on your credit score, which could play factor on honestly your credit score. Credit card companies and your credit score does get dinged often when you have a lot of hard hits. And that's not good because banks are less likely to loan you money if you're going to every bank, every credit card on the block to try to get something. Banks don't like that here. Multiple multiple inquiries in a short period can lower your score and make vendors view you as a high risk. So here's what I'd recommend doing: space out your applications and only apply when necessary. All right, the sixth and final mistake that I see is treating credit cards like free money. As the U.S. Credit card debt surpasses 1 trillion, a record 111 million Americans cannot pay their credit card balances in full. Using credit to purchase things you cannot afford obviously is going to lead to long-term debt. So we don't want that. We want to be able to take advantage of credit cards, not be fearful of them, but use them to our advantage to get free travel, to get great cash back. And so, guys, if you want to learn how to set some stuff up, let me know in the comments, like, follow, and we'll see you guys in the next one, guys. Take care.